Hello everybody, what's going on? So today I have got fresh sales data out of China for October 2025, and this chart tells a story the headlines are missing. This is the ranking for the premium EV SUV vehicle priced over 300,000 yuan, roughly 41,000 US dollars. This is where the big money is made. And look who is leading the charge among domestic brands. NIO didn't just have one hit, they put three models in the top 7. The NIO ES8 is a clear second, proving its flagship appeal. NIO ES6 sit firmly at number 4. And then at number 7, EC6 is there. This isn't about volume at the very low end of the market. This is about brand equity, premium pricing, and customer preference in most lucrative segment of the EV world. When you look at the domestic rivals like Li Auto or global giants like BMW, NIO is successfully defending and expanding its high-end turf. Their focus on luxury service and that unparalleled community experience is driving sales where margins are strongest. But the sales numbers are only half the story. NIO is building an ecosystem, not just a car company. First, you have their revolutionary battery swap stations. This solves the number one problem for EV owners: range anxiety and charging time. It gives NIO a huge competitive moat, and they are leveraging it aggressively. Second, the scale is exploding. Just in October, NIO's total deliveries across their brand hit an all-time high of over 40,000 vehicles, nearly doubling year over year. Yes, that include their new brand Onvo and the Firefly, which are expanding them into a more accessible high volume segment. Think of it like three-prong attack. NIO is your high-margin luxury brand, Onvo is their mid-market Tesla Model Y competitor, and Firefly is their entry into the European mass market. As these new, more affordable brands scale, they drive down manufacturing cost for the entire group, pushing the core NIO brand closer to sustain profitability. This is Tesla playbook, but with a unique high-value battery swap foundation. The market is currently valuing NIO based on its current losses, not its future potential. NIO's Q3 2025 earnings are scheduled to be released soon, and with record-breaking October deliveries already in the books, the stage is set for a significant positive update on revenue and gross margin. Analysts have a median price target around $7 mark, but let's look further out. As their multi-brand strategy achieve economics of scale, as the power swap network become a mandatory piece of their infrastructure for rivals, and as they consolidate their dominance in China premium segment, the valuation is going to be forced to reset. NIO is transitioning from an ambitious startup to a mature multi-brand EV powerhouse. The stock is currently trading like a troubled startup, but the company is demonstrating true market leadership in high value segment. If you are a long-term investor who believe in the future of premium EV market, NIO represents a deep value opportunity poised for a dramatic recovery. The future is electric, and the premium future in China is painted in neon blue. Hello everybody, what's going on? Few big updates are coming from news, and company founder CEO William Lee just confirmed that the Onvo L90, a sleek 5-seater electric SUV, is slated for the launch in the first half of 2026, originally pegged for the fourth quarter 2025. This pushback, it's not a red flag, it's a high five to success. Blame it on exploding demand for the L90. That 7-seater beast has been crushing it, delivering over 10,000 units per month for last 3 straight months. Factory lines are maxed out. That's a capacity crush born from winning, not from struggling. Lee put it perfectly in his update. The L80 will be launched in the first half of the next year. Those wanting a large 5-seaters can wait, or you can buy a 7-seater L90 now. And get this, the L80 isn't some from scratch redesign. It shares the vast majority of part with L90, making it basically a 5-seat sibling. That means NIO playing 3D chess here, prioritizing the hot seller now, scale production efficiently later, and boom, you are flooding the market with versatile family haulers without reinventing the wheel. Strategically, this is gold for NIO with the L60, L90, and now the L80 rounding out. The lineup Onvo is set to blanket over 90% of family EV buyers' pie. Think about soccer moms, road trip dads, and urban family ditching gas guzzlers. It's direct competition for heavyweights like Tesla Model Y, but with NIO signature perks like ultra fast charging via their battery swap station network, AI smart, and premium feel at accessible price. The L90 momentum, it's a proof Onvo isn't just entering the game. It's dominating the family segment in China's cutthroat EV arena. Now let's talk about your wallet and why this scream buy the dip for NIO stock. Sure, a delay might spook short-term traders, but zoom out, NIO deliveries are ramping. There some brand like Onvo are diversifying revenue stream, and this capacity hiccup is just growing pains from overwhelming demand. Wall Street been warming up to NIO's turnaround story. Remember, they have slashed losses, expanded globally, and now Onvo proving they can scale hit like the L90 without breaking a sweat. In market where EV adoption is accelerating, NIO position as agile innovator ready to capture shares from legacy automakers. Definitely after the launch of this L80, delivery onward delivery numbers are going to skyrocket because it will be priced lower than the L90, and generally more people buy these 5-seater cars. That is the reason why I can say that we will see huge spike in Onvo's overall deliveries, and this L80 will definitely surpass L90 deliveries volume, and because of that we will see some good momentum in its stock price as well. So get ready for it. With that said, thank you so much for being here. See you in the next one. Hello everybody, what's going on? One really important update is coming from NIOS, and I just got the news that NIO Germany hosted the team from Autorola, a global online used car remarketing and automotive IT solution provider headquartered in Denmark. Now, why you should care about a used car marketing firm? Because it directly impacts NIO's financial health and its future in lucrative European market. The collaboration is expected to involve online auction for the used cars and corporate fleet management. The key takeaway here is that this partnership solves one of the biggest challenges for a premium EV brand entering a new market: residual value. Think about it. Buyers hesitate to drop big money on a new EV if they are uncertain about its resale value. By partnering with a leading used car remarketing expert like Autorola, NIO is creating a certified high value exit strategy for their vehicle. This boosts customers' confidence, making the new vehicle a much more attractive, lower risk purchase. It's a foundational move to accelerate sales and market penetration across Europe. Autorola team didn't just look at the business model, they were reportedly impressed by the driving experience and capabilities of Nomi. Nomi is NIO's adorable AI-powered in-car digital assistant. So what does all mean for the stock? NIO has been in a period of heavy investment, expanding its charging swapping network, launching new, more affordable brands like Onvo, and making key international expansion moves like this Autorola deal. This heavy spending has weighed on short-term profitability and stock price. However, these are the investments that lays the groundwork for explosive scalable growth. The Autorola deal sign is an incredibly committed and ability to navigate the complex European market, a critical component of their global strategy, which will help them in future. The foundation for a major uptrend is being set. The Autorola partnership de-risked the European expansion, and the core technology optimized by Nomi and the Powered Swap network is already ahead of the curve. Investors with a long-term perspective who can stomach short-term volatility should view the current valuation as a strong accumulation opportunity. As NIO execute its growth strategy, especially as the revenue from new venture begin to flow. The stock is poised for a significant rebound next year. So get ready for it. With that said, thank you so much for being here. See you in next one.